Hi, this is Elliot Eisenberg of Graphs and Laughs here to catch you up to date on the latest in residential sales data for Hillsborough County. If you look at median sales prices for both single and multi, they fell just a skosh, about 1%, both single and multi. But on the average sale price, there's a big difference. It was up 16.2 on multifam and down 2.4 on single fam. Clearly, multifam is outperforming there. Similarly, if you look at sales activity, it's down 7.5% for single fam and up 0.7, almost 1% for multifam. So there again, multifam performing a little better. If you look at the sales price as a function of list price, down about 3% in both cases. A little bit less on single, a little bit more on multi. If you look at pending sales, multifam again doing a little bit better. Down only 6.9% pending sales, whereas they're down 19% for single family, so quite a difference. And last but not least, if we look at months of available inventory at current sales rate, it's up 70% for single and up 112.5% for multifamily. If we now look at Pasco County, single fam and multifam are performing very differently. On the single fam side, prices are declining about 3.1%, but they're up 15% on the multifam. So multifam is clearly ripping the cover off the ball. Similarly, if you look at sales activity, it's down 7.6 for single fam, but up almost 50% on the multifam side. And also, if you look at pending sales, it's up 1.2 on the single fam, which is pretty good, but it's up almost 38% on the multifamily. So multifamily is really doing particularly well. New projects are coming up. People want to live there. If you look at inventory, like everywhere else, it's up a lot in percentage terms, almost 78% for single fam and 150% for multifam. But in both cases, inventory remains at less than 2 months of inventory at current sales. Lastly, sales price as a function of list price is down in both cases, 2.3% for single and 2.9% for multi. It's telling us that the market is weakening, but the multifam market here in Pasco is on fire. In Pinellas County, single-fam home prices, median prices year over year didn't change at all, and multifam prices went up 2.8%. Very nice. In terms of sales activity, multifam did here a little better as well, falling just 10.4%, whereas they fell 12.8% for single-fam. If you look at pending sales activity, again, multifam did a little bit better, falling 14.8%, whereas multifam fell 17.2%. If you look at inventory in terms of, again, months of inventory, it's up 70% for single fam, or 1.7 months of inventory. And on the multifam side, it increased more like it did in the other two counties. It's up 210%, but here we have now 3.1 months of inventory, more than anywhere else or any particular type of property. Last but not least, sales price as a function of list price declined by 3.7% in both counties. And that decline and the weaker sales growth show you that here, like in other counties, the market is clearly slowing. It's still good, but it's slowing. Turning our attention to the national economy, GDP in Q1 was upwardly revised to a strong 2%, and Q2 is also now tracking at 2%. These are good numbers, and under normal conditions, we'd be very happy. But the problem is these high, good, solid growth rates are preventing unemployment from going up. It's preventing inflation from coming down very much, and it's preventing wage growth from coming down much. And as a result of that, the Fed's having serious fits. And the hope for pause in interest rates that would precede a cut in interest rates is being postponed, because in the end of July, the Fed's going to raise rates by a 1/4 point. The question now in everybody's mind is, when does the next rate hike occur? Does it occur 6 weeks later after the end of July meeting, which would mean the middle of September? Or do they wait 6 weeks and do it at the end of October, early November timeframe? Time will tell, but certainly expect for sure one hike of a 1/4 point at the end of July, and likely another one before the year's done. And as I said earlier, this is delaying the onset of reduced interest rates, and this combination of good GDP growth and high levels of inflation, core inflation is not coming down, that's causing interest rates to stay relatively high and not giving us any relief at the 30-year mortgage. 6 months ago, I thought that by now we'd begin to see some relief. Clearly, I was mistaken. The big concern that I have going forward remains the recession. That said, the US economy remains very strong. A combination of pent-up demand for services because we couldn't do a lot of stuff during COVID, and forced savings because we couldn't do a lot during COVID, has propelled the economy forward, kept up its resiliency, and pushed off the date of the coming recession. Enjoy the reprieve, and the recession won't be all that bad.